Mila, let us look at classwork 7. It says that Veritas Limited was founded on the 1st of March 2018. Its financial year runs from March until February, and Veritas Limited has 5 million authorized shares. I would actually use that information, and I would probably put that 5 million in my ordinary share capital note as authorized shares. They will have no rand value because they are authorized. Because they're authorized, they will not have a rand value. Hence, we have authorized number of shares will be 5 million. That's what I can use that information for. I will also highlight the dates to check if I'm giving the opening balance or the closing balance. So I've got 1 March here, and the share capital on 1 March was that much. And they're telling me that on 1 March, we had issued 3,040,000 shares. And then what comes after March is June 2021. That gives me a conclusion, which is that this is the beginning of the financial year. I have ordinary share capital on that date, which is the beginning of the financial year, and the amount is that 14,592,000. Under addition or under transactions, I was given the number of shares that relate to that 14,595. To recall that, you will start with 3,040,000 and the share capital will be 40,595. And then it says that on 1 June 2021, 120,000 shares were repurchased at 5 Rand 20. Now that 120,000 shares, I will put that in brackets. However, guys, the price per share that you put in here must be the average price per share. This 5 Rand 20, it is not the average price per share. This is not the average price per share. It is the buyback price. It is not the average price per share. To calculate the average price per share, you have to use the formula. Ordinary share capital before the buyback divided by the number of shares issued before the buyback. And we only have this ordinary share capital here, and the number of shares issued that relates to that will be that 3,040,000. Divide the two, it will give you average price per share before the buyback, just before the buyback. Or I can say on the day of the buyback, that's how much we had as our average price per share. It will be 4.80. That 4.80 is the one that you put here as the price for the buyback of shares. Note, you will take 4.80 multiplied by 120,000 and that will give you 576,000. Put that in brackets. The number of shares bought back, you put it in brackets. Share capital lost due to buyback, you put that in brackets as well. All right. If you're wondering why must we use average price per share, I normally refer to it as APS, APPS. It's because just watch the videos earlier than this one. Okay, I posted a couple of videos before this one. Check out those videos. I explained thoroughly as to why we have to use the average price. It's the same as calculating the value of your closing stock using weighted average cost. It's exactly the same principle. Because these shares were sold at different prices, we can't tell the cost of each share. So the ultimate closest estimate to the original cost of those shares is the average price. I won't stop here. That buyback of shares will affect our retained income. With our retained income, we'll start with the balance on 1 March 2021, which is 304,000. Then you will have profit after tax. Okay, I'll come back to this. I'll come back to this. Because it looks like I didn't prepare that one. I did it. I basically just prepared your ordinary share capital as a whole without realizing that I was supposed to do it per transaction. All right. Let's go to the 31st of July. On the 31st of July, we declared interim dividends. I'll just leave that to the end as well. And it says on the 31st of October, a further 450,000 were in issue, and they just leave it hanging like that. They didn't specify at what price those shares were issued for. Then they talk about all shareholders, shares in issue at the end of the year were entitled to a final dividend of 44 cents. I don't think that is helping us. However, I'm just going to have to deal with what I've got right now. And what I have is the number of shares that were issued, but we were not told at what price they were issued for. So I'm going to go back to my ordinary share capital and see if I can get that. I immediately noticed that I have the value of my closing share capital. In essence, I know that I issued 450,000 shares, but I don't know at what price. Now I'm just going to use the reverse operation from the bottom up. Take the 17,166, you minus 507, you add 576,000, you minus 40,595. That will give you your share capital of 3,150. When you take that and divide it by 450, which is the number of shares that were issued, you will have 7 Rand per share. And that's how you will calculate this. All right. I am going to go back to this. I will start with this over here, guys. Okay. This is 2,012,800, and they gave us the tax rate of 28%, which is 27% right now. But note that 2,012,800, it is profit after tax. And in our ordinary share capital, we only record profit before tax. Now, I will play with my numbers. Profit before tax will always be at 100. Profit after tax here, for this example, it is 28%. And that means profit after tax will be at 72%. The rule is that you multiply by what you want, you divide by what you have. Now, to calculate your profit after tax, oh, it's given to you. Why am I even calculating it? Because they just gave it to you that it's after tax. Ah, okay. That is if you calculate tax, but in this case, it's given to you. So I'll just put it right there as profit after tax. But normally, if it was something else, I was going to multiply by what I have, divide by what I need. All right. I don't need to do that in this example. Let me just go to the buyback of shares. How many shares were bought back? It is 120,000. They were bought back at what price? They were bought back at 5 Rand 20. But what was the average price per share? The average price was 4.8. Basically, we paid more than what we received. Average price is the original amount we received by selling these shares. It's considered to be the original amount that we received when you sold those 120,000 shares. However, we paid 520, meaning that we overpaid for the same shares. We received 480, but when we bought them back at 550. That means we as the business incurred a loss. And that loss, we call it loss due to buyback. And per share, how much will that loss be? It will be 0.4. Now take 120,000, which is the number of shares that were bought back, and multiplied by that 0.4. It'll give you the buyback loss of 48,000. Make sure you put it in brackets. Let's go to dividends. If you watched the video earlier on from the beginning, from lesson one, you will have noticed that dividends on ordinary shares are simply the interim dividends plus your final dividends. Interim dividends for the current year plus final dividends for the current year. Now, you will notice that we issued or declared interim dividends on the 31st of July 2021. The problem is that we need to know on that specific day, because they said declared 3 cents interim dividends, that is per share. I don't know why they left that out. It's supposed to be 3 cents per share. That is per share. And what we need to do is to figure out how many shares were issued by the 31st of July 2021. This was quite easy, by the way, because we had 3,040,000 at the beginning, and then we bought back 120. So when we declared interim dividends, we had only 2,920,000. Just take that and multiply it by your dividends per share, which is 3 cents. And that happened on the 31st of July. I don't know why the 1st of July that is happening on the 31st of July. And let's see how much will that give us. It'll give us 87,600. That 87,600 is your interim dividends. Okay. For your final dividends, they were declared at the end of the year. What we need to do is to write the end of the year, but note that things happened before the end of the year. On the 31st of October, we issued 450,000 shares, which increased the number of shares that are issued. So it increases them from 2,920,000 to 3,370,000. And these shares will have been in issue at the end of the year being the 28th of Feb. But they said that shares in issue at the end of the year were entitled to a final dividend. So all we have to do is that since all shareholders are entitled to the final dividends, we have to take that 3,370 times it by 44 divided by 100. It'll give us 1,482,800, and that will be your final dividends. When you want to calculate your dividends on ordinary shares, add your interim dividends with your final dividends and write it at the top of that shaded box. The amount will be in brackets because dividends reduce your retained income. And the amount will be 1,570,400. Now, all you have to do is to take that 304,000 304,000 plus this minus that, it will give you this one here, which is 698,400. And your final dividends, note that you will have to record them in trade and other payables as shareholders for dividends. The reason for that is because shareholders for dividends are final dividends that have been declared, therefore creating a current liability that will only be paid in the next financial year. There, the entity has, how can I put it? The entity has created an obligation because it declared to shareholders that it's going to pay final dividends. It has already created an obligation for itself that it needs to perform. When you declare, you create an obligation for yourself to do what you declared, which is to pay your final dividend. And that's why we put it under current liabilities as an obligation. It's a special type of obligation because it is the cost of financing the business in a way, because we have to pay back people that gave us their money to use to generate more money for the business. Okay, that's it. Try class work 8 and this will be your classwork 8. I definitely know that classwork 7 is from a past paper. I can't figure out which past paper it was. I am not sure about this one here, if it's a past paper or not. Please try it out. Let's see what you are given. You are given your ordinary share capital note. That's what you need to prepare. You also need to prepare your written income note. All right. For solutions to this, check out the next video. Thanks for watching. Kgotso.